Hello, I'm Cyril White. I am the owner and founder of Country Spirit CrossFit and Strong Together Fitness, Chelsea, in Chelsea, Michigan. And I wanted to create a video for everyone out there, all of you gym owners, all of you business owners that have some type of membership model, monthly membership model for your business, so that I can hopefully save you all the mistakes that I made in our business over the last 6 years. I founded Country Spirit CrossFit 6 years ago in 2014. It's currently 2020, and I've made all the mistakes you could possibly make, but hopefully learn from them as well. And I'd like to share some of those mistakes that I made. So first off, if you're just creating your gym or your membership model business, you got to figure out how much to charge for your service, right? That's the first thing you have to come up with. And the mistake that most gym owners and most business owners that have a membership model make, if they're new at this, if they were like me, and I came from a finance background, okay? So I wasn't new to numbers or accounting or spreadsheets, but I let my emotions get in the way, and I basically did the classic blunder of seeing what everyone else was charging in the marketplace and trying to undercut what they were charging or charge the same thing. And you absolutely do not want to go do that. You do not care what other people are charging or what you think your members will pay. Obviously, if you don't have a business that people will pay your membership fee, then you have problems, okay? But you cannot start out charging what you think people will pay or be willing to pay because what everyone else in your marketplace charges. That is a huge blunder and mistake, and I cannot overemphasize not to do that, okay? You have to put blinders on it first when you're just calculating this for the first time, and you have to say, what do we need to charge to pay our bills and to be profitable? Period, end of story. And if that's too much, then you need to rethink if you're in the right business or if you have the right business plan, okay? But you never, ever, ever charge what you think someone will pay, because people, you can put out all the surveys you want and ask people how much are you willing to pay for this, and they're going to tell you some low number. Obviously, no one wants to pay too much for anything, and everyone's cheap. Okay, so, but if you provide a value and can justify your costs, then people will pay it. I guarantee you, okay? When we first opened up, we charged like $95 for a monthly membership, and people said it was too expensive. Then we raised our prices to $130 a month. People said it was too expensive. Then we raised our prices to $200 a month. People say it's too expensive. Guess what? Every time we did that, our membership doubled. Every time. And we're in a small town, okay? So if your service that you're providing is worth the amount, then people will pay it. But you have to know what that is and what that minimum amount is that you can charge, that you have to charge to pay your bills and to be profitable. You have to start with profit, because at the end of the day, and I don't care if you're doing this, I give away our services for free. I would do it for free. I love what we do so much, and I do, and that's a mistake, because the more you do that, you're not going to be able to keep the lights on. You're not going to be able to put food on the table unless you're independently wealthy, which I am not, and your business is going to close, and then you're helping no one if you're not charging the right amount. And you have to have profit in there, because you're going to have lean years, you're going to have good years, you're going to have bountiful years. And if you don't put that profit in there, then you're not going to be able to grow the business. And if you want to put all that profit back into the business, great, but at least you have it to do, okay? So you got to start out with the profit, which is where this profit first concept comes in. It's a popular concept that was created by Mike Malkowitz. And it's really just common sense, but we business owners, for some reason, forget it. And this book, Profit First for Micro Gyms, was written by my accountant, John Briggs, and this is a really good book. I wish I had it 6 years ago when I first started. I would have read this first. It would have saved me a lot of headaches. So I've gotten all this from this book and my experience, okay? So I'm not like creating any of this stuff out of my own head, and I'm using people that know what they're doing and that have been through this, and I'm going to take you through how I determine how much to charge our members in our membership model. Okay, so first you got to start out with what you think your monthly expenses are going to be, okay, on a monthly basis, because if your membership model is charging people by the month, then you need to figure out what your monthly expenses are going to be, and you have to do that anyway. The mistake I see a lot of new business owners making and a lot of gym owners is they start with trying to figure out how much to charge, and they don't even know how much their expenses are going to be yet. So you need to first spend a ton of time getting your expenses as close to what you think they're going to be on a monthly basis as you can before you start trying to figure out what your membership costs will be, okay? Because if you don't know how much you're going to have to be paying out every month, there's no way you can know how much you need to be charging people every month, okay? So please spend the time in doing the research. How much is your rent going to be? How much are your debt payments going to be? How much are your team member costs going to be? How much is your cleaning costs going to be? How much are your utilities going to be? All of these things, you need to get as hard numbers as you can on all these numbers. And then you need to add 10% to those costs because they're always going to be higher than you think they are. And if you have that cushion, you're going to be better off for it. Guess what? If you overestimate these costs and things of that nature and you have more profit, that's just a plus. Better that way than underestimate and you don't have enough money to pay your bills, okay? So add 10% on all your expenses and set up a table or a spreadsheet like this. So you have your monthly expense, and you can obviously extrapolate that out to a yearly if you have year memberships, if you're charging by the year, all that good stuff. But you need to know what you're going to bring in and what you're going to pay out every month. Cash flow. Cash is king, okay? You're going to have total revenue, which is sales, as the top cell. Then you're going to subtract costs of goods sold, what it costs you to sell whatever you're selling. If you have products, pickleball paddles, protein you sell, supplements, whatever that is, t-shirts, whatever those costs are. Then what your team members cost you. You're going to subtract what your team members cost you, your employees, your coaches, your office staff, things of that nature. Your sales, if you have separate sales staff, what do those cost you on a monthly basis? Then what your profit is going to be every month. And this is, I would say, a minimum, put in 5%, okay? I would say, depending on your business, anywhere between 5 to 20% at the high end is going to be what that number is. But you can't calculate that until we know what our top sales number is. And we can't calculate what our top gross sales number is that we want to shoot for, minimum, until we know what all the expenses are. Okay, so we're backing into this. Then, what your owner's pay is going to be. Oh, I should mention, if you as an owner are doing something in the role of an employee, so for example, in our gym, I coach classes. I classify myself as a team member, and I should be paid whatever I'm paying my team. Don't make that mistake. The mistake I made was, you know what, I'm going to pay everyone else first. I'm not even going to factor in how much I'm working, what it's costing me. If I had to pay someone to do that, and it was a mess, okay? And still, until I started factoring in how much it would cost if I had nothing to do with the business and I had to pay someone to coach my classes, to do what I do in the business, can I be profitable doing that? And at the end of the day, then you know you have a real business when you don't even need to be involved in the business for it to be awesome, do what it does, serve your clients, and most importantly, grow. If you're not growing, you're going to die, okay? So if you're providing some type of service, in my example, the classes I coach, I need to factor that in as if I would have to pay someone to do that and not factor that in, because if I leave that out because I'm coaching those, let's say I coach all the classes and I don't factor this number in what that would cost to pay someone, the number, it's going to show that we're very profitable, but I'm not paying myself. I'm not getting paid for that. It's hindering the business. I can't grow because I'm doing all the classes, and I don't have a good understanding what the numbers look like because I'm fudging the numbers because I'm not paying myself to do that service like I would have to pay someone else. But just because I'm the owner, I'm not taking the pay, and then I really don't know what the number is, and it's really not a business then. It's a job that I'm not getting paid for, which doesn't help anyone, okay? Owner's pay is what you would have to pay someone to do whatever you do as an owner. So in my instance, I don't count my coaching. I can hire a coach to coach, all right? But there's all the other stuff. I manage the coaches. I manage the team. I do the sales. I manage the books. I manage my office administrative staff. I do the marketing. I do the strategy. If I had to take myself out of the business, what would I have to pay someone to do all that in this market, okay? And it's literally what you would have to pay someone, and not like I want to make $100,000 in this business, so I'd pay myself $100,000 in an ideal world. No, you wouldn't have to pay someone $100,000 to do this. You could probably pay someone $65,000. What's the minimum amount you could get someone to do as good a job? They're never going to do as good a job as you because you're the owner, you care the most. But someone that you can motivate with paying that amount, and they're going to do a good job and have the skills and the experience that you have, or maybe more. What's that number? Okay, I chose $5,000 a month. That's roughly $60,000 a year, which I think would be a decent wage for someone to come in and do what I do outside of coaching classes. Then, what are your taxes going to be? As an owner, you got to factor in your taxes. You're going to have to pay tax on this business, so you got to factor that in. I use a number of about 30% of your profit and your owner's pay. You're going to have to pay tax on that. You should factor that in and not wait till the end of the year and be, oh my God, I don't have the money to pay those taxes. Then you're constantly playing catch up every year. So you got to factor that in. And again, that's going to be about 30%. If you want to make it more or slightly less, but I think that's a good round number, minimum number of the owner's pay plus whatever your profit's going to be. Then, equipment or maintenance costs. This is something we all forget. We buy some initial set of equipment. We don't factor in the fact that we have to continuously maintain that. Equipment's going to break down. Shit's going to break and wear out, and you should have an ongoing budget that's factored into your numbers and your membership costs of what it's going to be on a monthly basis to replace that. And you're not going to, if you're just starting out and you don't have real numbers to work with, it's okay. Do the research, ask other owners, ask other business owners. That's why I'm sharing this with you guys, and just do as well as you can and have some kind of a number for that. I have $150 a month. Then you're going to subtract all your operating expenses. Operating expenses are all your other expenses that don't include any of these expenses. So you're not going to re-include employees, owner's pay, all that stuff, equipment. These aren't in operating expenses, but it's everything else. What's everything else? Your rent, any debt payments if you're servicing debt, cleaning, marketing, advertising, phones, licensing, dues, everything else that you're going to have an expense for. Utilities. How much are your utilities going to be every month, okay? Cleaning supplies, office supplies, computer supplies, all that stuff, printing, postage, all those operating expenses that are termed outside of your employment expenses or other expenses that generate the revenue for the business. Overhead, that's the term I'm searching for. These are overhead expenses. All of those, get a good handle on those, and those all go into that operating expense number, and I have $9,000 a month on there for ours. So, we're going to add, if I add my cost of goods sold at $300 a month, my team members' expense at $4,000 a month, my owner's pay at $5,000 a month, my equipment at $150 a month, and my operating expenses at $9,000 a month, I come up with $18,450. To be conservative, and the more conservative you can get on these numbers, the better. I'm going to round that up to $20,000, okay? $20,000 a month to cover those expenses, all right? Then, from there, now I can get a profit. What's 5% of 20,000? It's $1,000 a month factored in for profit. Then I can calculate my taxes. $1,000 a month profit, that's a dollar sign, and $5,000 owners pay, that's $6,000 a month. So 30% taxes would be $1,800 a month, okay? Now I filled in those numbers because there were numbers I needed to calculate. Now I have all my expense numbers, and I can go back. If I add all these expense numbers up, I come up with $21,250. And that's what I call my nut, okay? $21,250 is my nut. That's the nut I have to cover every single month to make my expenses, to have a little profit, to cover what I'd have to pay myself or an owner or someone else to run the business, to cover my equipment costs, to cover my taxes. That's everything I need to cover every month. At a minimum, I have to cover $21,250. In sales, I got to bring that amount of money in to cover all this. I factored in my profit. I factored in what I'd have to pay myself. So I'm not going to be surprised if I don't bring in this amount and then I don't have a profit, or I can't cover my expenses or the business expenses. So now I know the minimum number. If I bring in more than that, awesome. That goes into more profit. I can reinvest that in the business. I can distribute it to the owners, do whatever I want with it, okay? But the minimum now, I know I have a good handle on the minimum amount I need to bring in. Then I take that number, $21,250, that's what I calculate my membership costs on. I know that's the minimum amount I have to bring in. I've included profit and everything I can think of in that number. I've increased all these expense numbers by 10%, so I have a fudge factor in there. Then I know how many members do I need at membership level A, membership level B, to cover that $21,250 every month. That's how you start to back in to how much you charge for your memberships. Because now, okay, and now you think realistically, based on your research, you know, we could probably get 10 members at membership level A. We could probably get 25 members at membership level B, whatever. If we charge these amounts for those memberships, does it equal $21,250 a month? Yes? Good. If it doesn't, if it's lower, then you need to increase your membership costs. Don't make the mistake of saying, oh, you know what? We'll keep our memberships low, but we'll just get more members. It ain't that easy to get more members. It's much easier to charge enough up front. And now you know, if what you're charging isn't worth $21,250 a month, in my example, then you're either not charging enough, or your service, if people aren't going to pay that, if they're not willing to pay that, and you've done a good job marketing so everyone knows what you're offering and how much it is, and they're not willing to pay that, there's one or two issues. Either, number one, they really don't know and understand why it's worth that to pay that amount every month, or what you're offering isn't worth that amount. And if that's the case, at least then you know, okay, well, we need to alter our service or provide something else or provide more so that people will pay that. Don't make the mistake of saying, oh, we'll just reduce our prices. No, that's a recipe for disaster. You need to figure out if our memberships based on this model need to cost $200 a month, then we need to add $200 or more in value. And if we're doing that and we know we're doing that, then we know that we're charging what we should charge. And you're not going to worry about what everyone else is charging or what people will pay, because they're always going to tell you that they'll pay less than they will, especially if they don't know the value of what you offer yet. All of our members that come in and try our service for at least a month know that we're worth what we charge, 100%. It's the ones that don't try it, that don't have any idea, that compare us to other places that don't charge what we charge. They have no idea. So it's your job to get those people in, and however you can, give them a feel for why you can justify charging whatever you charge. I hope that helps. I hope that makes some sense. Email me, text me, call me if you have any questions, and best of luck to you, and I hope you don't make all the mistakes that I made. Thanks.